My guest today has worked for some of the world's biggest futures brokerages and ran one of the largest metals trading desks in the world. He joins me today to talk silver, and he says this time of year is one of his favorites when it comes to trading the metal. We're going to find out why. Phil Streible of Blue Line Futures joins me now. Phil, good to see you.
Yeah, thanks for having me on.
All right, so I want to know why you like silver, especially this time of year. You say from around mid-December to early February.
Yeah, it's because of the fact that there's a seasonal tendency, and this year around, it seems like it's more powerful than years in the past. We monitor a lot of seasonal tendencies across 27 different commodities, and silver is one that tends to work like clockwork, where you go and you start looking at adding silver around the second or third week of December. And because of an allocation shift and some new policies that companies will put forward, like initiatives with like green energy or zero carbon emission, you start to see that inflation in silver prices, and it tends to carry to about February to March.
And this has been something you've been tracking for the past, you've seen returns for the past 14, 15 years, correct?
Yeah, 14 out of the last 15 years, this particular trade's
Oh,
worked out.
so what kind of returns are you seeing?
Well, usually, I mean, historically, the average has been about $1.50 move in silver, and it seems like everyone just rushes into it. A lot of investors, just like when you come around the start of the year, we're all going to work out, get in shape, stop drinking, blah, blah, blah. Well, what people do is they look at what are some of the best commodities and what are some of the key themes going into a new year. And it seems like silver is always one that investors gravitate to.
Now, let's talk gold because, usually when we're tracking silver prices, we always say, well, silver tends to trade along with gold, but you say not so.
Yeah, this is kind of how this played out. So, generally, our investing process, what we do is we form a roundtable discussion. My partner, Bill Baruch, I've got another partner, Oliver Slope. And what we do is we come up with some of the key themes, and what we believe are going to happen in 2021. And we look at some of these really simple things. We should have the COVID vaccination, it should be distributed. We'll see reflation. We see rising interest rates as indicated in the 10-year note. There's a lot of optimism going on in the economy. And then two other major things. We're seeing a green energy initiative, and we're seeing those electric vehicle growth has really picked up. Now, how does that impact, say, silver versus gold? Gold is not in any of these products, and gold is negatively impacted by rising interest rates. So we believe that the ratio is going to continue to break down in favor of silver.
All right, Phil, it's interesting you say that, but I just want to flesh that out a bit. Why wouldn't gold go higher in an environment of, trillions of dollars of debt, zero interest rates, no slowdown in money printing?
That's really interesting question because one would logically think that. I mean, that makes for a great environment for gold. But what's happening is we're seeing not only investors chase other asset classes. So if you look at like the Commitment of Traders report, it's got a historically low level of participants in the gold market, but the rising interest rates, those are happening. A lot of people come out and argue and say the Fed said that they're holding rates near zero for the next 2 years. Well, yeah, that's the next 2 years. The 2-year note hasn't moved, but the 10-year note has. So we're seeing real rates and nominal rates are rising together, and that's going to eat into the gold market. I really don't believe that. The other issue is that gold yields 0% interest rate. So investors are going to naturally chase yield, try and get income. They don't need as much safety as what they felt they needed before. And you look at the correlation matrix between the dollar and gold are traveling together now. So it's just not, I'm not saying that it's down for the count and it's over, because I'm really optimistic on the second half of 2021 on gold. But right now it's just out of flavor. You don't want to hold that ass.
Why the second half, Phil?
Oh, okay. Because of the fact that this is the other thing that's going to impact gold. So if you look at the economic data that just came out, the jobs number, you look at how the job number was a miss, but the previous months had increased the number of jobs created. What that does is that will ratchet up any economist's or analyst's GDP forecast. It's going to be negative 1.4% the next quarter, but they like to look at quarter over quarter. So that's actually going to rise 8%. So when you start to do that and you start to see acceleration in the rate of change of these numbers and they get better and better at better rates, that will push people into other asset classes and not hold gold. What will end up happening is you get halfway through 2021 that those rates of change are going to compress. All of a sudden, anybody who needs a job is going to go find the job. The jobs that are going to be available are going to continue to, reopen. All of a sudden, this business open, that business, things like that, and it'll be naturally absorbed in. And once those flatten out, then people are going to say, we need the next catalyst. We need more stimulus. We need rates cut more. We need more monetary policy, things like that. And that's what causes gold to get that second resurgence.
All right. I'm following your theory there. Just getting back to silver, if you're so bullish, are you in that triple digit silver camp?
Oh, we got to make it one. We got to make it one time.
Let's just stick to like 30, right?
So the way we played it was we went to like April, and we're probably going to roll those farther out. And we bought a $29.50, $35 call spread. It costs a few $1,000s. The max gain is like 27,500. We felt that, okay, it's going to dance its dance. And then once it finally gets wind and it breaks out, hey, we won't be chasing it because we're already positioned for a breakout.
You also like base metals. Which ones in particular, Phil?
Well, I do like platinum, palladium, rhodium. So if you go back to, everyone's talking about electric vehicles and electric vehicle growth, and silver has the highest conductivity of any metal that's out there. Where's the silver found in these electric vehicles? And it's in the electric engine, the battery pack, and the battery management system. Well, when you go to the base metals, all these other vehicles that are out there, the other section is focused on those zero carbon emission. So they need to increase some of these base metals and catalytic converters. So that's, again, platinum, palladium, rhodium.
I like giving our viewers, actual trading strategies here. So if you're favoring silver and a lot of the base metals and the PGMs, would you be selling gold here and buy these?
Yeah, so that's what somebody could do. And I ran some seasonal back testing on like platinum versus gold. That tends to outperform gold right at the butt end of the year. And that works out for a couple months. But really, I think that it would be really wise. The way you would structure this is, say you might buy silver and you might sell like a gold miner against it, or the gold mining index, because I think that they'll be more impacted than the price of gold.
Good thoughts. Phil Streible, thank you so much for joining me. You mentioned resolutions, so I'm going to put you on the spot. What's yours?
To better follow like an investing process, have something written down, really structure it, think about balancing longs and shorts in a portfolio, and really, instead of fighting the Fed, try and front run the Fed and position yourself that way.
Wow, a very serious resolution. I thought you were going to tell me something like, I don't know, less hockey or something.
Yeah, right.
All right.
In my life.
Yeah, I know. All right, Phil Streible, thank you so much. And thanks for watching. We'll have much more for you on Stansberry Research. In the meantime, follow us on all our social media platforms. We're on Facebook, LinkedIn, Instagram, and Twitter. We're all there. Thanks for watching. I'm Daniela Cambone.